Well, welcome back to the FundForum International. I have the pleasure of being here with Dr. Mark Mobius.
Thank you.
Who this morning gave the keynote speech. Mark, that was very inspiring.
Thank you very much.
Great pleasure to have you here. There's so many things to talk about. We only have a few minutes. I wanted to touch on one of your blogs on your global investor sentiment sensibility and the outlook that your clients and the survey that you do each year have for emerging markets, where the greatest expectations are and what you found. I think you interviewed 20,000 people in 20 countries, 19 countries or so.
That's right, yes.
What are some of the lessons that you learned from that?
Well, I think the first thing is that everybody's afraid of volatility. I mean, this is the focus of a lot of investors. They're afraid of these incredible changes in prices that take place. So clearly our job is to tell them that's a problem and an opportunity, because if you're willing to go in when the prices are down, you can make a lot of money. The other thing we're finding is that people are now finally becoming more and more aware of the global marketplace, in the sense that they're seeing the viability of having a diversified portfolio rather than concentrating in only their home country. As we've been saying for many, many years, you're never going to have the best performing market if you stay in one country, because one country is never the best performing year after year. So that's another thing that comes true in the survey.
Do you see that there are more countries that see less of a home bias? I mean, in Japan, you would have seen that for numerous reasons.
Yes.
When you look at your institutional clients and your clients, is there a slow shift occurring? Or, I mean, emerging market exposure is still relatively small for most institutions.
That's right. Most institutions are between 3 to 8% at most.
Yeah.
And as you know, the total market capitalization of the world, 34% is emerging markets. So most people are underweight. But there's definitely a shift towards global. At least people are saying, look, I've got to take a global view, then maybe emerging markets. Because emerging markets still are considered risky by many people.
Which is interesting in a way, because you said, sort of as an optimist that you are, which I think is probably the most important lesson that we need to take away, that when you look at the world today, you have the Arab uprising, you have the European issues around Greece, US in an election cycle and issues there, and then the BRICS are stuttering a little bit, or at least some of them. And then you have the other emerging markets, a number of them, and I guess frontier markets as well. So when you look at it today, as people consider emerging markets risky, yet in Europe, in the Middle East, in the US, we don't see really a non-risky environment. And then you have emerging markets and frontier markets. Where would you place those regions and the opportunities?
Well, the interesting thing now is that emerging markets are growing at 5 times faster than the developed countries. So immediately, you know there's going to be companies in these emerging markets that will be growing much faster. And you notice that a lot of multinationals are now putting more money into emerging markets because they know where the growth is. The other factor is that the perception of riskiness is changing. If you look at the credit default swaps, which are the insurance policies that you take out for sovereign debt, you'll see that emerging markets in many cases are lower in risk than the developed countries. So Spain is higher than Russia. Or you'll see Portugal is higher than, let's say, Turkey or whatever. So there is a changing perception, and I think it's mainly for 2 reasons. One, they're beginning to realize that emerging markets have more foreign exchange. Emerging markets have less debt to GDP. So these 2 factors are beginning to sink in to the investment community.
Is there sort of also a change in, if you look at various areas converging, that the investor mindset is changing a little bit because institutions in Asia and Latin America are seeing the world a little different than the developed or so-called developed markets? And does that change a little bit how you work with clients when it comes to allocations in various parts of the world?
Well, that's interesting, because a lot of our clients now are coming from emerging countries. For example, Chilean investors have billions of dollars in our funds, in our emerging market funds. And you're seeing that around the world, because local pension funds, local investors are becoming richer, per capita income is going up, and we're getting those as clients. So our growth of investment management business is in the emerging markets.
Now, do you see, in Chile, obviously we had the La Polar scandal, and then Dublin funds were banned, and but what I find very interesting is they have a huge emerging market and Asia exposure in their portfolios.
Yes.
But they can't invest in Asian managers, so it's mostly, I guess, a US brand that will gain from the competitive advantage of being in the same time zone and having an established business there.
Exactly.
Do you see that continue, or do you see that there will over time be a change? Because we probably now, you mentioned it this morning, also emerging market firms are now acquiring brands and are going into developed markets. So how do you see that picture?
Well, there will be some emerging market money managers who become bigger and bigger and acquire developed market money managers, and they become a brand again, and they'll participate in that business. But up to now, it's been the big American and European brands that in the investment management business that are outstanding.
Do you see, because in the emerging market space, I guess a lot of the assets are still on the equity side, flows pre-2008 also mostly into equities. Now you see emerging market local currency debt and some other fixed income themes play out. Is there a convergence there as well of creating balanced products, of getting investors across asset classes?
Well, actually, it's interesting in our case, in the case of Franklin Templeton, the fixed income emerging markets business is actually bigger than the equity business. And that's because they've been so successful. Because our managers of fixed income emerging markets have been looking at not only the interest rate changes, but the currency changes. And in recent years, the emerging market currencies have appreciated. So you've had a double-barreled effect. You've had the increase as a result of lower interest rates, which have pushed up the bonds, as high yield bonds, and you have the impact of the currency, which has appreciated. In some cases by 30 or 40%. So we've had an incredible flow of money going into emerging market bond funds.
Now, a couple of things that I find hugely interesting. I guess this is now the 25th anniversary with Templeton.
Well, it's 1987 when we started, yeah.
So, you know, when you look at this 25 years on, I think first you talked to John Templeton to open a Hong Kong office, that this was necessary. And there were, I guess, many changes over those years. You being in emerging markets, you doing 200 days on the road a year. Where do you see that for your organization, some of the crucial changes as you have built this emerging market business and the opportunities going forward?
Right. Well, first of all, size. When we started in 1987, we had 100 million. Today it's 50 billion. So that's an amazing change. Second is the number of countries. We started in 1987 with 5 countries. Now it's over 50, well over 50. The other thing that's happened is that in 1987, we and Capital International were the only kids on the block, so to speak. We were the only one in emerging market funds. Now there are many people that are having emerging market funds. So the scene has changed dramatically.
You mentioned this morning that you recently did a private equity fund for Brazil. Capital International recently launched their 6th private equity fund, raised $3 billion. Not so much on the fund side at the moment. Is there also convergence of where you take various vehicles and you just get more emerging markets exposure through whichever channel or vehicle it would work?
Yes, we have a private equity side of our business, but we focus on only 2 areas, pre-IPO and pipe deals. So what we see it as an adjunct to what we're doing on the main funds, because what we are doing is being able to use this incredible database that we have, over 20,000 names, that we can see opportunities. And we can also, as a result of this private equity business, get a deeper insight into a particular industry, which is very useful for the rest of our analysts. So it's a combination of things.
2 other things that I have to mention, because I find them very interesting. You wrote many books, but you also have your blog, you're on Twitter. There's a manga comic and multiple comics out on you as a superhero of emerging market investing. Have you seen also a shift there of how information is delivered, how people sort of want to look at information, whether it's on the investment side or just education materials? Because there's been a lot of work, but has there been a shift for you in the last couple of years?
Big shift, particularly the internet. Our blog gets thousands of clicks, and it's just amazing to me that we're getting this kind of attention on the internet. So we have a blog, we have Twitter, and of course now with these comic books, it's a great way to communicate, actually.
Is that something, because it's been translated in multiple languages, I don't think that anyone else out there has that, but it's very befitting. Are you going, when it comes to sort of thought leadership, are you exploring that? Is that something that you now enjoy more, the direct interaction, vis-a-vis sort of a book which is more passive, someone buys it, reads it, but now you have the more instantaneous feedback loop there. Is it important for your investments as well?
The feedback is very, very useful because very often your clients can give you ideas and they can steer you in a certain direction because nobody knows everything. There's no way that even with the analysts that we have are scattered around the world that we can know everything. And sometimes we'll get an idea for a stock or a change in political direction in a country or something like that, which can be very useful from somebody who is on the Twitter or blog. They're asking a question, and that question results in you looking into something that you might not have looked at before.
Yeah.
So the feedback is very useful.
For me, last question. I saw you yesterday at breakfast. You just had flown in from Hong Kong.
Yeah.
Tomorrow you're out to Moscow.
Yeah.
Now you're in Monaco. How do you manage your schedule? I think, sort of not only the operational side, the investment side, but also for you aside from you loving it and being really enjoying what you do. Any tips? All of us have to travel around a lot, but how have you over those years kept up being excited about it and manage your life?
Well, I think the key is exercise. You've got to make sure that you
at the gym.
take time. Yeah, you got to go to the gym every day without fail. And the second thing, jet lag is basically sleep deprivation. So you've got to make sure you sleep when you're tired, which means sometimes in the middle of the day you take a 1 hour nap just to catch up. That's really the solution.
You've heard it here. These are the secrets to life and being an optimist, obviously. Thank you very much, Mark.
Thank you.
It's been a pleasure
Nice
talking.
seeing you.